What is going on, guys? Welcome to another market update. As usual, let's get straight to the charts. So as mentioned in the last video on the Guantanamo channel, there was a possibility of Bitcoin going back down, even if this move here was a nice bear trap for the time being. One of the reasons for that warning was the unfilled CME gap, which I will talk about soon. So Bitcoin is just creating another macro consolidation pattern similar to a bull flag. In fact, I previously mentioned that the current price pattern is likely quite similar to this one over here, where we had a bit of a breather and a macro bear trap between two large upthrusts. The patterns are actually looking a lot more similar now, with this breakdown sweeping the expected lows of the pattern, just like in the previous one. The only difference is that this one looked like an upward sloping bull flag, while this one over here looks more like a downward sloping one. The purpose of this move is to grab all the liquidity just below the consolidation pattern, ensuring that most bulls get stopped out of their longs or even liquidated. Overall, there isn't much room left to the downside anymore because our major 6-month resistance of 110k should in theory act as very strong support now. I don't really see us dropping significantly below that level, if we even reach it at all. This move looks like a decisive move to price discovery instead of a macro fakeout, so I don't see any reason why we wouldn't reverse back to the upside soon. Now let's look at some other charts, starting with the DXY versus Bitcoin. So the fact that the rate cuts are actually being pushed back right now is having a positive impact on the dollar. As you can see, the dollar is pumping, but this is normal anyway. You cannot just keep going down in a straight line. But in the short term, this is a little bit bullish for the dollar. I don't think this will last for too long, however. And obviously you can see that Bitcoin is also dumping with the dollar pumping here. They have a pretty nice inverse correlation most of the time. Now to the CME. And you can see how beautifully this gap over here was filled. I mean, in just one candle over here. That's quite typical. I don't see us coming back down to fill this CME gap. Otherwise, as I said before, I'm going to pack my bags because there's no way Bitcoin could recover from those levels and go back to 200,000 or so, at least if it follows the same 4-year cycle it has been following so far. When looking at the unemployment rate, then we can see that it is actually ever so slightly increasing right now, which lines up with some news that I'm going to talk about in just a moment. So here's where we have to talk about the federal funds rate, which is a pretty important topic. We have discussed before that whenever we're in a cutting cycle over here, we usually have a recession with it, with a few exceptions obviously. So what are we gonna have this time? Are we gonna have a recession, or is this going to be the exception? The interesting thing is that we have actually stayed at 4.33 for quite a while now, and now the economy is actually starting to show its first signs of weakness, which means that we could actually, cut some rates here soon, maybe even in September. And the interesting thing here is that Trump actually might have been right about this. The jobs numbers are not looking very good, and it could have been a little bit too aggressive of a policy to actually keep these at such elevated levels for such a long time, because the economy is showing some signs of weakness right now, and Powell will actually be forced to cut these rates pretty soon. And the good thing is that this delay over here actually bought us some time, which allowed Bitcoin to pump for quite a while. And now it's probably too late to save the economy if we're gonna have a recession. But this always comes with a delay, which means that for the next, let's say, 3 or 4 months or so, things can look very bullish when looking at the stock markets and Bitcoin. But once we're toward the tail end of that cutting cycle, that's where we could actually have a recession, if we're going to have a recession. And it could end up looking something like this over here, where the Fed cuts the rate in September, while Bitcoin is still pumping along with the stock market. But by that point, the jobless numbers will probably be so bad that they could end up triggering a recession. But let's hope that doesn't happen. Now let's look at the liquidity levels. And the good thing is that most of the long side liquidity has already been taken out, as you can see, because you can't just keep longing with very high leverage in a bull market and still expect to stay solvent. You're going to get liquidated sooner or later. But right now, most of the liquidity is actually up here at 123,000 or so. And that's probably where we're going to be headed next. Oh, look, I just got an alert over here. We just entered a new long over here, which is beautiful. We're averaging down our order over here. And once the market actually reverses, we're going to make a lot of profit. Anyway, let's go back to the liquidity levels and funding rates. So the overconfident short side liquidity is actually being reflected in some of these exchange funding rates as well, as you can see. It's pretty crazy what the funding rates currently are, considering that we're supposed to be in the mania phase of the bull market. But this isn't being reflected in the rates. This will probably change pretty soon, and we're going to liquidate a lot of bears. Now, let's look at some news. For our first piece of news, we have a nice article about the impacts of the SEC's new crypto policy. As you all know, just recently the SEC was trying to kill crypto with ridiculous overregulation. However, the SEC's new Project Crypto marks a dramatic shift in US crypto policy. Chairman Paul Atkins declared that most crypto assets are not securities, directly reversing the stance of former chair Gary Gensler. The initiative aims to modernize regulation, encourage innovation, and bring digital assets into the heart of US financial markets. So I'll summarize the four key takeaways. First, we have regulatory clarity. That means that crypto firms now face less legal uncertainty, as Atkins is pushing for clear guidelines and rejecting Gensler's broad securities definition. Next, the US is now in a clear crypto leadership position. The friendlier stance could bring back companies that left the US, reigniting domestic crypto innovation. Thirdly, there's going to be an acceleration of tokenization. With better infrastructure and support, traditional financial assets are likely to move on chain faster than ever. And according to the fourth and final point, this is going to have a long term market impact. Analysts believe the regulatory shift could boost crypto adoption and prices for years, not just short term. We can already see this with all of the institutional adoption. Together, these moves really signal a pro-innovation era where crypto is no longer on the defensive, but positioned to transform investing and become a key driving force of the global markets. For our next piece of news, we have crypto hacks surging by 27% in July. We recently discussed how the problem of crypto-related crimes has been getting worse as the price increases, and sure enough, blockchain firm PeckShields is now reporting 17 major attacks that led to $142 million losses in July alone, a 27% increase from June. The CoinDCX hack was the largest, accounting for 44.2 million, while a 42 million exploit at GMX saw most funds returned. So hackers are increasingly targeting individual retail victims, companies, their staff, and infrastructure to steal their coins. So stay safe. I can even confirm this trend anecdotally because I've seen a major increase in phishing emails saying how my crypto is in danger, so I need to go to their scammy website and reveal my private keys so they can fix me up real good. Stay safe, guys, and don't fall victim to these fear tactics. Keep your coins in cold storage whenever possible and cross-verify all information that is sent to you. For our last piece of news, we have nuclear war saber-rattling between Trump and Putin, which is contributing to the current Bitcoin price dip. So Medvedev was bragging about the dead-hand nuclear launch system that is capable of automatically destroying the West even if the entire Russian leadership were to be wiped out. Trump, on the other hand, says that the United States is fully prepared for nuclear war, which is an absurd statement. I think unless you're a psycho, you can never be fully prepared for a nuclear war. You can have measures in place, but you can't be prepared for a world-ending event. I don't think anything is going to come from this, and Bitcoin is going to recover again very shortly. If not, Bitcoin would be the last thing on our minds anyway, right? Now, back to the charts, and as you can see, the M2 money supply has actually been contracting here for a while. But this is a problem for a later day because if Bitcoin were to follow the money supply with a 70 or 80-day lag, as usual, then this potential dip could happen sometime in late September or early October. But even that could just be a temporary dip. We don't know yet, because the end of the bull market should be sometime in November or December if all things go according to plan. When looking at the S&P versus Bitcoin, you can clearly see how correlated these two asset classes are. Look at this brutal crash over here. And this is probably related to multiple factors. First of all, the markets needed a correction. Also, there's rising tensions between Russia and the United States. And we also had a pretty weak jobs report recently. When looking at the crypto fear and greed index, then you can see that we've had a pretty massive dip here as well, even though technically it's still counted as greed right now. But that's normal for the bull market. Interest in Bitcoin is actually staying strong, however. As you can see, it has actually been increasing lately, even with this dip. And by November or December, it'll probably reach these types of levels over here. 90 plus, maybe even 100s. When looking at Bitcoin dominance, it makes sense that it is recovering slightly now that the markets are crashing. Altcoins usually crash more than Bitcoin when things are uncertain, but this downtrend will probably resume soon, and altcoin season is probably not cancelled yet. When looking at Ethereum, then we can see that it's also consolidating near the tops here, and it's probably gonna have a short squeeze here pretty soon. Most likely the price will end up going to $10,000 plus, and that will mean actually gaining some dominance over Bitcoin. I will even probably buy some Ethereum here during this dip. I know guys, that's blasphemy, but I'm gonna use that Ethereum to buy back more Bitcoin later, I promise. Let's just have a quick look at ETH BTC as well, and as you can see, there's still some potential juice to squeeze here if we go to like 0.048 BTC per ETH. Now back to Bitcoin, and let's have a quick look at the moving averages as well. We recently hit the 50-day moving average after crashing down from the 20-day moving average. The next potential support line would be at 107k or so if we drop there. Hopefully we won't, but that's definitely a possibility. This dip could have some further legs if we cannot contain it over here. There's absolutely nothing to worry about when looking at the weekly chart. We're not even close to the 20-week moving average over here. Most likely, as I said, we will end up stopping somewhere near the previous all-time highs. Typically, Bitcoin has been pretty boring or bearish during the summer, except for July. But right now, we're still performing relatively well, all things considered. This makes sense because Bitcoin already consolidated for a long time and needs to catch up to the typical parabolic trend of the mania phase and its ultimate moon target. I don't think we're going to get a super bearish August once it closes, and definitely not a bearish September like we often do, but who knows. Personally, I think the next months are going to be pretty fun, guys. But don't get overly greedy by over leveraging. I'm going to try to stay calm and collected. Write this baby up, leave the froth to the gamblers, and then buy back in again much lower. This is how you build generational wealth and outperform 90% of the market. By the way guys, I'm going to be moving to Italy next week, so my next market update could be a bit delayed, depending on how fast I can get everything set up. I need to construct some furniture, install my rig, and set up an internet connection, among other things. And for all of you Minotaur clients who need help with setting up your bots, don't worry. Chris will be substituting for me, and I'm sure he will do a great job. Anyway, see you soon guys.